Ladies and gentlemen, it is my pleasure to introduce Bob Dudley as our next keynote speaker, as Peter mentioned. Bob joined us last year as Petroleum Executive of the Year, and today he joins us months ahead of his just announced retirement. We heard a lot about gas yesterday, but Bob is looking to carry the conversation forward today, and so we can get started. I will hand off the podium to him.
Well, thank you very much, Casey, and thank you. It's good to be here. It's been an interesting few days in London. I expect you'll know that last week I did confirm some rumors and announce that I'll be retiring from BP in the new year. I think 40 years in this business feels about right. Company's in good shape. Bernard's a great pair of hands if you haven't met Bernard. And now I'm getting back to, I'll get some time back, but I think now is the moment to pursue one of my remaining ambitions. I'm going to apply for a role on stage with the Royal Shakespeare Company. Or perhaps not, I don't know. They could cast me in a high drama, low comedy, or a tragic farce. But one of the benefits of stepping down is that you can speak a little more freely. So this morning, I'm going to talk about oil or money. I'm not going to talk about that. I'm going to talk about gas, natural gas. So one of my concerns is that gas is being increasingly marginalized, even vilified and demonized. Some folks are saying that a role for gas conflicts with the world's climate ambitions. There's some really smart people saying this. But that is a misconception. I think worse than that, I think it's misleading and maybe well-intentioned, but I think it's actually irresponsible because gas has a vital role to play in the energy transition. And I simply do not believe we can get to the goals of Paris without it. Not just in a transition, but in the destination. The net zero economy we must achieve in the decades ahead, but only if we take the right steps now. Methane leaks or methane leaks and flaring can and must be tackled, and the detection technology that's being developed is leaping ahead with drones and satellites and aircraft. There will be nowhere to hide for these leaks. And gas itself can and must be increasingly decarbonized. So let me talk a minute about the energy transition. I'm sure that you too came past protesters around London this week. Our industry is under intense scrutiny here in London and many places around the world. So we meet today with the intensified glare of global expectations, and that's okay. We welcome those heightened expectations. It's our opportunity not only to say we agree that the world is not on a sustainable path and that we need to move to a low-carbon energy system, but to show how much we're already doing and that we are going to do even more in the future is important. That's a challenge. I believe it. I believe this industry can and will rise to it because our industry understands more deeply than many what the energy transition really entails. It is the transformation of the giant global energy system. It's complicated, not going to be easy. It serves billions of people with coal, oil, gas, nuclear power, hydro, solar, wind, biofuels, geothermal, and all these things. Each fuel has different attributes, costs, and benefits. Yet even with the full array of energy sources we deploy today, we still fall short of the world's needs. So for every 6 families in the world that turn on an electric light after dark, there is one family that has no access to that. 3 billion people still cook with wood, cow dung, kerosene, and coal in their homes, not in their kitchens, in their homes. So the question is just not how do we get to net zero? It also has to be how do you get to net zero while meeting the needs of every family? Billions more people coming on the planet, and there is no single answer. How we decarbonize heat in London requires a very different answer than it does in Boston or Beijing. Same goes for electric power and even domestic cooking. Those differing answers will emerge as different economies, sectors, companies, and customers all look for the cheapest, most effective solutions, and each relative to the resources available to them. So it's a very complex picture. Wish it were easy. But to succeed, we need every tool at our disposal. To exclude gas when so much is at stake is to take a huge and unnecessary risk. The sun doesn't shine all the time, the wind doesn't blow every day, we know that. Battery storage for weeks or months is a long way off. Today it's only hours. Not all countries are blessed, like Iceland, with abundant geothermal, or hydropower, like Brazil or Canada or Norway. But gas, however, is abundant. It's affordable. Gas is an inefficient store of energy in a way that batteries can't replicate now and quite possibly never will. You combine renewables with gas. When you use the renewables, it's not there. You store the energy in the pipes with natural gas, for example. It's easily transported, piped from producer to distributors to customers. Gas is energy rich, supplying huge quantities of power or heat instantaneously. And gas is flexible, able to generate power when the sky is overcast and the wind turbines are still not there, able to power cars, trucks, and ships, able to heat our homes and fire our stoves, and able to generate the intense heat even to make steel and cement. And of course, this is critical, I said at the outset, to feature in a net zero system, gas will need to be decarbonized as well. And here's the good news. Gas can be decarbonized. We have the means to do that. The energy industry is already producing carbon-neutral biogases, which when burnt releases only the carbon absorbed by the plants from which they're made. We can now make carbon-neutral synthetic gas. Admittedly, these are both niche products now. But gas, more broadly, will play its role through carbon capture, storage, and hydrogen. And these are no longer niche products. We're investing in carbon capture to decarbonize gas at the sources. We have a plan through the Oil and Gas Climate Initiative, or OGCI, to accelerate its development. Hydrogen is in use around the world, and it has many of the best properties of natural gas. It is so plentiful and can be transported much more so. It's safely stored and transported, and the existing gas infrastructure can be easily converted. Think about natural gas. It is essentially 4 hydrogen atoms connected to 1 carbon atom. You can move natural gas around the world to a place and then decarbonize it on a big scale where you need the hydrogen. Yet, unlike natural gas, the product of burning hydrogen is water. So that is one of the reasons, and one of many, I'm very hopeful as we head toward the middle of the century, we will tackle this issue. It's not going to be a straight line. In fact, the biggest obstacle to decarbonizing gas is not technical, it's political. In this country, gas heating for new houses is set to be banned by 2025. In the US, at least 12 big cities have banned or plan to ban gas in new buildings. And on the back of a successful and important campaign against coal, Michael Bloomberg is leading a $500 million campaign that would halt the building of gas-fired power plants. These efforts may be well-intentioned, but they are misguided. They rest on a false equivalence between gas and coal, and an assumption that an all-electric economy will emerge just as soon as we close with alternatives. The truth is different. It's by switching from coal to gas that the world has cut more than 500 million tons of CO2 this decade alone. Greenhouse gas emissions in this country, which should be much more proud of itself, in Britain, is now down to 1880 levels by moving coal out of the system here. Victorian times. We have people in BP that say, we can't come to London because the air quality is lethal. I travel around the world. London's got good air quality. Greenhouse gas emission, the gain is made precisely because gas emits half of the CO2 when burned. That's why it's so important in the energy transition. Yet gas in a decarbonized form is also crucial for the energy destination. I think maybe I should not, I'm not done, am I? So new gas infrastructure doesn't lock in hydrocarbons, as some critics say. And ultimately, there is no other way to go than gas, with all the other fuels as well. A few weeks ago, I was on a panel with Ernie Moniz. Some of you may know Ernie. He was the energy secretary under President Obama. As he put it, this is Ernie saying this, there's a lot of happy talk about wind, solar, and batteries, but it doesn't help any of us to make claims that challenge the laws of physics. His point is that in a renewables-led economy, you need backup. Batteries are getting better all the time. This is his say, yet batteries last for hours, not days, weeks, or seasons. That's why you need hydrogen, the most scalable form of decarbonized gas. To remove gas from buildings or other infrastructure risks pushing the world down a single path. Only for us to find out too late, the path falls short of what the world needs. It's an attempt to achieve the energy transition with one hand tied behind our backs. We might get there, we might not. And even if we do, that destination energy system will be inferior to the one we have and might have achieved if we had only used all the tools at our disposal. It will be far less resilient and much more expensive to try and solve the entire world's energy system with renewables. We like renewables. BP invests a lot in renewables. We have thousands of people work in renewables. It's just one thing. One estimate said the cost of decarbonizing the European energy system would be around $1 trillion more if decarbonized gas were excluded from the mix. So this morning, maybe I could suggest a way forward, not a detailed plan, but an outline of where we must focus our efforts. 2 recommendations for the energy industry and 2 recommendations for governments. So first, one for us, the energy industry. It's up to us to demonstrate that decarbonized gas is not only viable in a net zero system, it's essential. It will take demonstration projects at scale of exactly the kind we're doing through the OGCI. At Teesside in the north of England, we're working on a large natural gas power plant alongside a CCUS project that will capture and store millions of tons of carbon. But it's not just about demonstration. We have to advocate, be willing to develop the arguments for decarbonized gas. Second, this one's for us also. We need to produce the gas in our existing system in a much cleaner way, of course. That means introducing higher proportions of biogas into the blend, means cutting down on methane leaks and flaring, which is today the Achilles heel of gas. We're going to get there, and it's something at BP we're already doing. We have targets of down to 0.2% leaks in natural gas. Set up, all the companies have done this, but we've got a $100 million fund for new emissions reductions in gas. And a month ago, we announced, I think a global first, we will now continuously measure and monitor methane leaks in all of our major oil and gas sites around the world. We're using drones, cameras, lasers to detect leaks that would previously have been invisible. It's a global first. It will become the global norm in our industry, I'm sure. And that brings me to my third recommendation, and this one's for governments. If we are to produce gas cleaner and better, that's increasingly decarbonized in the future, we do need regulation. That includes direct regulation of methane emissions across the value chain, from the production to the transportation of natural gas. Not only is it the right thing to do, the more gas we keep in the pipes and combust it, it's efficient, we can provide more to the markets. But governments should go forward more. For over 20 years, we've been calling for carbon pricing. It is the most effective, powerful tool there is for decarbonizing energy. So we're not going to stop calling for a carbon pricing. About 20 countries around the world now do have carbon pricing. But fourth and finally, another one for governments. We need to get the infrastructure ready for decarbonized gas. New natural gas projects must be future-proofed for a low-carbon world. Gas distribution systems must be made fully hydrogen-ready, just as they increasingly are in this country. We need flexible industrial processes that can work equally well with methane and hydrogen. And it's not that expensive. It's far cheaper than when you start from scratch later. And yes, we need growing investments in CCUS, just like we're doing at OGCI, to make it commercially viable. But let me conclude here. We have the necessary technologies, resources, and ambition. The hardest challenge is to win around skeptical minds. We see it here in London. And then to bring people together with a common set of solutions. It won't be done by demonizing or vilification from either side. It will be done by the hard work of evidence building, shaping and promoting legislation, deploying the new technologies, advocacy, and developing new markets. It requires a recognition that there isn't one road to net zero, but many, many paths, and we'll have to pursue them all differently in different countries. It demands an ambition to reach net zero world where the precise shape is still to be determined. I think it's getting clearer, and that world is achievable if we keep all the paths open today and continue to work together instead of pulling ourselves apart. Thank you.
Thank you, Bob. I have a couple questions to follow up on your comments. So you talked obviously a lot about the need and ability to decarbonize gas, but that isn't the gas that the industry is selling today. It seems that if that were, then it would be perhaps a lot easier to make the pitch to society about gas's role in the energy transition. So if the tools are there, why is it not being implemented to scale today, given the scrutiny that you're under?
Well, I think natural gas is demonized in, I'd say, the East Coast, the West Coast of the U.S. and Europe. It's not really in the rest of the world. But the industry, you couldn't see it, you couldn't smell it, you didn't know it was there. And it reminds me almost of mobile telephone, smartphone technology, cell phones that advance so rapidly. We're now, within a few years, going to know exactly where it leaks, and we need to fix it, keep it in the pipes, combust it. And it does have, it's a greenhouse gas, so we have to do that. But then that will, without that, you can't start on decarbonizing gas completely. Hydrogen is still very expensive. Infrastructure comes in time. You can make two kinds of hydrogen. You actually use renewables to make electrolysis and hydrogen, but so many industrial processes, they call it blue hydrogen and green hydrogen. You have to make it economic. So you have to have the pilot projects make it work, some help from governments in certain places. And I'm sure we're going to go there, but I am shocked at the idea. I don't like I've said this before, I don't like the term fossil fuels, because fossil fuels is such a wide spectrum. Between coal, oil, and natural gas, they're all on a wide spectrum. And what's happening is people are saying we can't do any fossil fuels. And I do not believe we can get there as a world without natural gas.
I mean, do you see the collective gas industry committed to greening itself? Like you said, I mean, methane leakage is something that just needs to be taken care of, but you're going to be judged by your worst actors. So do you see the industry stepping up its own self-regulation?
Well, it's a global system. All the companies in OGCI, which are 13, about 30%, and many, many other companies, and many of them represented in this room, it's amazing what happens in the fields now. Infrared goggles, drones, satellites. We know when there's a leak, we can go stop it, but you can't do that all over the world. Some countries are behind, for sure. I think pretty much the world's committed to eliminating routine flaring. You have places in the world, and we work there, Iraq and some places that are really tough places to work. It's probably not their biggest priority, so there's going to be a change over time. I see flaring being reduced in Russia quite significantly, but you can't do it all at once. So who's going to be the leaders? I think you're going to take a collection of companies that are forward-leading into this to set the example, and that's going to happen.
You mentioned that the pressure has intensified on the industry, obviously, and that has also come from the investor front as well. When you spoke last year, you pushed back some on ESG disclosure and kind of what was being asked and things like that. And it seems to me, hearing you speak since then, that there has been a bit of a change in tone, maybe a bit of more acceptance that this is just what's coming. How has your thinking evolved on that front?
Well, ESG, a year ago, not everybody even used the term, and there were certain groups that were looking, still, that want a scenario to Paris, and that's impossible. So, some people are requiring a scenario or a few scenarios. I think having a broad set of scenarios is the only way. But ESG is interesting. So, I was talking to somebody the other day. Last month, I saw that Tesla was in the top quartile on ESG, and they were in the fourth quartile on ESG. 2 ESG summaries. And I said, this confuses companies. And so I said to somebody, how does this work? And they said, well, some people drop the G in ESG, which means governance. And all the funds are doing this differently now. And I've come to the conclusion that ESG means big E, little s, and sometimes G. With the rating agencies, and they're all different. So I think there's like 30 different ESG ratings or metrics that are trying to find their way in a competitive world to be the standard. And so if you're a company, you try to make everybody happy. It's a little hard, but we try. But I think the world of ESG has to also organize itself, standards. And then there's another 130 elements of surveys. I mean, we could have an army of people doing nothing but answering surveys. And you just can't do it all. So it's a mixed picture, and this is how things evolve, I'm sure.
Well, obviously, your tenure as CEO was really shaped by Macondo. I mean, it was such an enormous problem that dictated everything from dividends to divestments and that sort. Now that you are on the other side of it, and as you kind of hand off the keys, are you finding more pressure from investors to be bolder on kind of what your go-forward strategy is?
Well, I think so. It's interesting when you sit down with investors, and many of you have had this, you sit down with one group of investors and they say, do this. And you sit in another group of investors, they say, do this. We have actually investors who say, we don't want you investing in renewables. If we want to invest in renewables, we'll invest in renewables. And then you have another group that says, you should go 100% renewables. So that's the way shareholders are. There's not a single shareholder. It's the whole spectrum. They want us to be bold in everything. So we're trying.
Right. Fair enough.
And Bernard at BP and the team is a great team, and they will do this. And I'll be cheering them on. No, I think all companies pressure, and the cycle time of the world is so fast. You know, you used to be able to have a strategy presentation, people would digest it, and now it's like tweeting, social media, and the pressure to do things quickly is quite enormous on any business world today, and I think that's just the world we're in today. And,
I mean, just in terms of kind of your broader pitch to society, I mean, you've seen the industry get pushed back even on things like funding arts and the Olympics and stuff like that. I mean, how do you even have a seat at the table anymore to try to sell decarbonized gas? Is anyone listening?
well, wait till I'm an actor at the Royal Shakespeare. No, I think, you know, we supported the arts in the UK for 40-something years. The UK is a very rich country. It may not need our funding for this, but we support around the world, you know, STEM and Paralympics here in this country. We support where we operate demining minefields in Angola, hospitals in Senegal and Mauritania. We just try to do the right thing. You don't need to demine Britain, so we're not going to do that here. But I think we just try to be good citizens of the communities we're in. And decarbonizing gas, you can't do overnight. You know. And by the way, as the world has turned its back on nuclear, by the way, it has put a huge amount of pressure now on other forms of energy because it's the ultimate renewable. So I think you asked if we have a seat at the table. I don't think anybody doesn't want to talk with us. But I think we just try to be reasonable about support of the culture and the communities where we are.
I want to make sure we have time for a couple questions from the crowd. So there are microphones if you want to raise your hand over there. Put your hand back up.
Hi, my name is Nicolas Delcourt. I'm part of the Leaders for Tomorrow program. I'm also an exploration geologist with Total on the Guyana-Suriname Basin. So you just talked about nuclear as being ultimate renewable energies. Do you think oil and gas companies should invest more in nuclear? Yes or no? And why?
So the question was, with nuclear being important, should oil and gas companies maybe invest more in nuclear? I think many companies, we've looked at it, and quite frankly, for BP, we see the liabilities around it as too high to risk as a company, and I think most nuclear programs are backed by governments with government utilities. So I'd be surprised if you see energy companies like ours investing in nuclear. Maybe down the road, if really safe, small, modular nuclear reactors, you know, can become very localized in places like Africa or something, maybe. But I think there's a better role for other people in nuclear. And I think nuclear has a role in the U.S., in the world. I mean, what you're going to see, I think, is the 40-year-old nuclear plants in North America and some in Europe closing, and at the same time, brand new ones are being built in China. And so the amount of nuclear is about going to stay the same in the world, but it's going to be moving to Asia.
Jim Wicklund at Stevens, you talked a great deal about the future of natural gas. Can you spend a few seconds talking about the future of crude oil?
It has a great future. It definitely does. I mean, think about this. There's going to be movements and shifts in the percentages of energy. 20 years ago, Fatih Birol made this statement. 20 years ago, 81% of the world's energy was oil, gas, and coal. Today, 81%. Think about that. Now what's going to happen is that coal's market share will go down, gases will go up, but that little bundle of stable energy, liquid hydrocarbons, that is stable at room temperatures is quite an extraordinary piece of energy. It will, I hope, never be burned in things like to power or whatever. It will be used, and there is a big role for chemicals going forward. And it will, it's going to be really hard for airplanes and heavy-duty trucks and vehicles, which will have some liquefied natural gas, but it has a role and will have a role for a long time. There's lots of different scenarios out there, but I don't know how the world can get there without it.
Go ahead.
Hi, Evan Quillen from Columbia University and Leaders for Tomorrow. You mentioned the need for a carbon price, and this is obviously efficient from an economic point of view, but it's failed several places. Washington State, arguably progressive in the US, failed twice. So how can the industry work with policymakers to come up with a meaningful carbon price?
Washington State is a really bad example. I don't believe it was a carbon tax, but look at Europe. So our company and others helped the European trading system of carbon back around 2006-07. It was called a failure, but actually it's working really well today. It has a carbon price over $30 a ton, and you add that on to the carbon price of the UK, which is about 14, and that's why you moved coal really out of Britain. It failed not because of the system, it failed because of the financial crisis. And after the financial crisis, people were not making the investments that in industrial capacity that actually supported a price. There have to be certain characteristics of a carbon tax or a price. But a carbon tax, you can't just tax producers, you have to tax the consumers who are going to hit the button on the wall as well. You can't have leakage out of your state, so it just moves industries. It's not an effective tax. And you really have to have in advance some sense of what you're going to do with the tax. Washington State changed it right before, took the 10 highest emitters, exempted 6, and then the money was going to an unelected board of where the money would go. That's not an effective tax. That's a political get money thing. I think you can't have a global tax on price on carbon because then it becomes a currency play. But if you can get one going in North America, get one going in Europe, and get one going in China, then you'll change the world. And the Chinese are working really hard on a carbon price system, trading system. So I'm optimistic about it. But you can't call something a carbon tax and say it's good if it's not good. So I got a lot of heat for that one.
Oh. Sorry, sir. I'll come to you next.
Hi, Bruce Bullock with SMU in Dallas. Do you think it's fair to say that both the public and investor expectations are higher on European energy companies than they are on U.S. companies? And if so, how long do you think it'll take before that kind of pressure catches up in the U.S.?
It does seem there is more pressure in Europe, I have to say. I think in the United States, they really want to know you're going to get a return. And they want to know that your dividend is well and you're investing the capital well. And I think that's sort of what represents the United States in many ways, not just in energy. But, and they seem to be less worried about that in Europe a bit, but I do see it shifting more to the U.S. But I think the fundamentals of the way the U.S. looks at markets is different in many ways. And I think the ESG, you talk to fund managers, they want to invest, and the governance people sometimes don't. And that's another challenge for a company, because you deal with fund managers, and then you talk to the governance people that say, we want you all in renewables. Fund managers want you to provide a good return from your classic businesses. And we're just going to have to find that balance. Does that make sense? Yeah.
Thank you.
I know him.
Nick Coleman from Platts. Another issue that defined the early part of your tenure, Bob, was Russia. And I wonder if you could talk a little bit about the risks and opportunities in the former Soviet Union, including how the Rosneft investment has worked out. Also, BP's very large presence in Azerbaijan, and maybe I see some interest in the eastern side of the Caspian as well, Kazakhstan, Turkmenistan. A lot of questions, I think.
So Russia is a very important a country for BP, and we have a strategic partnership there with Rosneft. I think it is going extremely well. It's not a financial investment. We are active in the company, and then we do other joint ventures in Russia. So, I mean, it gets lots of press and not always popular from one newspaper to the other, but I am very comfortable working in Russia for BP, and we'll continue to continue on with that as well after. And then we have a very big business in Azerbaijan, you know, and that's a great example of what the energy business can do, is absolutely transform a country, absolutely transform it in 20, 25 years. And it's tricky, you know, we have this is what the energy industry does. We have this great pipeline system that goes up from, it's gas from Azerbaijan to Georgia, go across Turkey into Greece, or across Albania to Italy. I mean, that's one of the things that companies of our size can do, is cross-border things. It's actually hard, even for governments, to get along. I mean, who would have thought that Greece and Turkey would say, yeah, put a pipeline between us, as an example. So that's what we do, and we're comfortable with that, and I think we'll continue to do it. We have to pace and allocate our capital carefully and risk, but we're not the only one. But I'm really proud of our industry to do things that no other industry can do, I think.
We do have time for another question, but I want to ask one first. Sorry. Just on gas, I mean, one headwind for gas's growth and market share is that it is more expensive than coal. Renewables are getting increasingly competitive as well, so there is that pressure there. How do you see in really key markets like China and India the kind of the policies and political will to reach the targets they have on gas, or is more needed?
It's a great point, because it's different everywhere in the world. So in the United States, gas is by far the most economic alternative. So emissions levels in the United States are now down to about 1990 levels, simply because the market moved coal out. Didn't require legislation, it just moved it out of the market. You have China, where gas is expensive. I think I said this last year, but a Chinese official said natural gas is the French perfume of fuel. It is very nice, it's very rare, and it's very expensive, which I kind of sums up the view. But air quality has driven a lot of change in China, and I expect natural gas to be moving more into China. I expect someday a gas pipeline coming down from Russia will bring more gas, but China is growing so fast, it needs virtually every kind of energy imaginable. And you have to really congratulate China on the growth of their renewables as well, and nuclear. India, it's a real difference in price. It's quite a difference in price, but India wants to bring as much gas as they can, and we're developing gas fields in India. But it's another population that's growing like this, and there'll be no population growth, I think, in North America and Europe, or energy demand growth. It's all in those countries. And if I could just point, the epicenter of climate change, I don't think is London or Northern Europe or the US. I mean, there's a coal-fired power plant being opened once a week now in 8 countries around the world. We don't hear about that. And this is like new ones. They're not like 40-year-old ones. So countries are going to have to look out of their own prosperity and population growth. And a lot of the arguments strike me. There's two sides of the great dual challenge. There's reducing emissions and increasing energy for more people. And all we're hearing really today is reduce emissions. Nobody's talking about how we're going to take care of these countries that want to raise just electricity or a refrigerator in a village to keep medicine. You don't hear that argument here. And I think it's a bit of a rich country view of the world, rich countries, energy-rich countries' view right now. But nobody's listening right now yet.
One more question?
Thank you very much. Ted Paulus, OMV. Yesterday, Mr. Pouyanné said that renewables in total can offer returns in the double digits, and you've talked about how there's this dilemma that a lot of us are facing between some investors that want returns, some who want to focus on the transformation. And I believe Mr. Van Verden also this morning alluded to double-digit figures in renewables. So does BP share that view that the returns are there, especially given that you guys were into renewables before it was really in vogue 10, 20 years ago?
We have a big wind biofuels business and also now I think Europe's largest solar development company. For us, those returns are not as competitive. They're not yet at double digits. And you mentioned the lower cost of renewables, and people talk about the really low cost. But when you look in the all-in cost, that's when they work. It doesn't actually support the rest of setting up a system and a backup system. So what we've done with solar is really interesting. And we own 43%, maybe more now, of a company called Lightsource BP. It's biggest in UK. We've taken it to 11 countries around the world. We invested originally about $200 million in that company. And what we've attracted in that company, so it doesn't count as our capital, but I'll tell you, it wouldn't have happened without it, $7 billion of capital from around the world to invest in these infrastructure projects. They don't get double-digit returns, but there's a lot of funds out there that are very happy to have a long-term cost of capital or just above returns. And so that we find may be a better way of enabling the solar business, and it's big now. But people say, oh, you only invest 3% of your capital. And I say, well, that's sort of an accounting thing when you look at what we're doing in solar. So there's different ways to fund it. And Patrick and Ben, believe me, they know what they're doing. So I didn't hear what they said today.
All right, well, with that, we're going to wrap up. So join me again in thanking Bob for his time.
Thank you.